Hello and a warm welcome to the special CNBC Africa debate coming to you live from the city of Durban on the sidelines of the World Economic Forum on Africa, which is currently in session. My name is Gugulethu Cela, and today we gathered to discuss how we can re-engineer Africa's infrastructure potential through unlocking capital, seeking further partnerships, and of course, this aiding us in achieving inclusive economic growth through responsive and responsible leadership as aligned with the theme for this year's WEF Africa conference. Naturally, when it comes to infrastructure, it's no doubt that on the African continent, we know that there's a shortfall of developments as we have been left behind with regard to the level of infrastructure development that takes place. I want us to start off the conversation by tying it in to the overview regarding the World Economic Forum theme for this year, how we can attain inclusive growth through infrastructure development. Joe, I'd like to start off by getting your opening comments regarding this theme.
Well, thank you very much. Good morning, everyone. I mean, if we talk about inclusive growth and the challenges we have, I think we just start with the opportunities first. There's about 1 billion people on the continent, and only about 33% have electrical power. So if you want to bring this continent and those many, many young people to where they deserve to be, we need to get started with the development of power generation. So everyone needs to have reliable, affordable, and sustainable electrical power. I think that's the first one we need to go look at. Second topic is infrastructure. That means moving people and goods, very important. And then the industrialization will come because, everyone will build on a very sustainable and reliable infrastructure. Alongside with that, industrialization only happens if we can have and train people to help us then get the job done. So training, education needs to go alongside with the build out of the infrastructure in electricity and mobility and the like. So I think that's the challenge, that's the opportunity. And if you look at the WEF here in Africa, it's a perfect opportunity to get things started. I'm very proud, I have to say, very proud that the German government was sending Mr. Schäuble, our finance minister, and also Brigitte Zypries, Secretary of Economic Development, because it is not just about talking, it is about really showing people that we are serious. Mm-hmm. And our Chancellor is going to make Africa and the development of this continent the #1 priority at the G20 in Hamburg this year. Mm. And that's, I guess, something where we need to really push hard and help the continent to develop. And typically, you don't go there and tell what needs to be done. You better go there and listen what can be done, what people want, how governments can support to put the framework together so that the private sector can act. So I'm not only hopeful, I'm actually really excited about the opportunity. That's why I also wanted to be here and not just send greetings via Twitter, because it's important that you show your commitment. As of yesterday, we said that Siemens will commit €1 billion for economic development projects. So we will finance and build those projects. We can be really fast, although we are a big company. We built the three biggest power plants ever built in the world in 18 months in Egypt, and that can be done in any country, anywhere in Africa.
I hope that we certainly get to that objective, which is what we want to get out at the end of this conversation today in the next hour. But as you've mentioned capital, you've mentioned speed, you've mentioned partnerships, which is also quite critical. And those seem to be, and education, yes, and skills and development. And we'll certainly unpack each of these in their individual capacities. But Martin, you've obviously got very bold views as well with regard to the shortfalls. Yes, there are some threats and concerns, but of course opportunities as have been highlighted by Joe. But from your perspective with regard to setting the context for today's conversation, we know that there's a significant shortfall. Are we tapping into each of these avenues as highlighted by Joe enough?
Good, thank you. As Joe so correctly said, the demand side is obvious from a demographic perspective, from an underserviceability of both hard and infrastructure on the continent. And secondly, the willingness to supply and build the infrastructure undoubtedly is there. So of course we can go into the sort of more micro challenges of why this does not naturally take place, but then put this in context and learning from Germany, if I may. In 1989, end of 89, I found myself in Berlin I was a youngster, still am.
Of course.
And it was a crazy place to be. The Berlin Wall had come down, literally. The sort of Comic-Con Eastern Europe was the traditional socialist closed economies. Eastern Europe were closing, and what was Eastern Europe became emerging Europe, and Germany became one. Point I want to make is at that exact time, in a few short years afterwards, that political shock resulted in deep structural reforms in that economy. Structural reforms that created market opening for private capital, which went into infrastructure, largely into Eastern Europe. Exactly the same thing happened. I'm not sure if this is a good omen or a bad one. I was living in South Korea in 97, 98, Asian financial crisis. And we saw from Indonesia up to Seoul, the financial crisis, a financial shock, resulted in market opening and structural reforms. And again, private capital opportunities presented themselves. In our context in Africa, since Q4 2012, on the solid commodity front, from July 2014, on the oil price shock, if you will, we've had a commodity shock. Eastern Europe had the political shock, Asia had a financial shock, we've had a commodity shock. And now we see from Egypt, as you mentioned, Joe, to Mozambique, to Ghana, is subsequent fiscal blowouts in these countries, amongst others, is now creating privatization opportunities in the pursuit of good fiscal governance and management. This creates new opportunity for infrastructure investors and operators in what were traditionally very closed, state-owned infrastructure markets. For me, that's the macro trend here. And we're seeing this prying open, if you will, post-crisis, let's call it structural reform, that's creating opportunities for private capital in traditionally it was only the domain of the state. That's the lesson from Eastern Europe, from Asia, as I understand it, and now emerging increasingly and gathering momentum in our own continent.
You mentioned something so critical there, which is obviously unleashing the potential for private capital. But on the continent, what we've seen is that a lot of the time government funding or DFIs have played a critical role when it comes to infrastructure projects. I definitely want to come to you, Canon, to get an overview as to how we need to attain that 70% mark of infrastructure development through GDP in ensuring that there's efficient planning and that the private sector feels comfortable enough to actually be involved in participating here.
Yeah. So I agree with Joe and Martin that the critical, to unleash Africa's kind of potential, we need to focus on infrastructure and education, no doubt. And I think we also have to think about how do we bring the vulnerable into and give them economic opportunities. Here I'm talking mainly about women. And as long as we don't give them access to opportunity, economic opportunity, we're losing half the labor force. Also, I think the other important part is that we have we're going to have as Africa the biggest labor pool, bigger than China, bigger than India. We're going to be the biggest market. We've got the dividend, demographic dividend. So this is not about a handout to Africa. This is about the next big market as well. So I think we're going to look at it in that way, the next growth engine. Then shifting to what I think is the opportunity, just building again in the comments, our work says that in order to kind of get to that 70% of GDP stock level, we think the gap or the spending needs to increase to about $150 billion a year.
And we
by
know
2025. We're about 80, we think. And that's just on hard infrastructure, forget the social, soft. At the moment, government and DFIs are providing about 80% of that investment. Chinese funding about 15, and the private sector about 10. So there's a huge potential to scale up private sector financing. And if you look at the trend of where the money is, where the spending is going over the next 10 years, we think there's still a gap of about $30 to $40 billion a year that has to come from somewhere, either from China, either from private sector financing, because the DFIs and the MDBs and governments will reach some limits. So I think that's the kind of, if you wanted to put a problem, and you can argue about whether it's 2 billion here, but that's the scale of, I think, the challenge and the opportunity in my view. So let's just to put that number out there. And I think for inclusive growth, what we've got to think about is where can government focus on the soft and the hard infrastructure where no one else can do it, and leave the rest to the private sector and create the enabling environment for them to come in and to partner with them. I think that's what we've got to figure out. There's a temptation for governments and the public sector to go after the easy, the quick wins, to show results. But we've got to figure out how to resist the temptation and go for the harder stuff and create the market for the private sector to come in the, if you will, the the more commercially viable sectors.
Exactly. Busi, clear to me, want to get your feedback on the IDC, certainly going in for the kill and not necessarily trying to attempt at easy wins only, but also improving the participation of the private sector in these developments to attain inclusive growth.
Absolutely, and the difficulty that I have is where government seems to be in, or deemed to be in competition with the private sector. I think the better models are where government is working lock in step with the private sector. I don't think that there should be carve-outs in terms of where the private sector is playing in, privatization is great, where the opportunity presents itself. But I think there is opportunity on an ongoing basis for the government to crowd in through creating the conducive environment, the billions of dollars and euros that the private sector has available. If I may just touch on the gap that we have, or from an inclusive growth and inclusive economy basis, we have infrastructure in some instances, for example, on the social side. Healthcare in South Africa is an example where we have infrastructure that is underutilized, and infrastructure in certain segments of the population that is bursting at the seams, that can't manage to cope with the demand. I think there is an opportunity there for better utilization of existing infrastructure. It's important that we maintain the infrastructure that we have. In South Africa, I think we're waking up to the fact that in instances, we don't pay enough attention to the maintenance of the infrastructure. And therefore, as we try to address the existing gap that Martin was talking about, there's a new gap that is coming along. We need to continually watch all of that and make sure that we're funding maintenance, we are funding correct utilization, optimal utilization of infrastructure, and that the private sector and the public sector are working lock in hand to unravel this conundrum.
We'll leave it on that powerful note, clearly ensuring that we find a way forward. There's a common vision, inclusive partnerships, and of course skills development and honest and efficient allocation of capital that is funded. Then maybe we'll build just more than pyramids, right, Joe? Building up on your Egypt example.
Absolutely.